Good morning, traders. It is Thursday, February 28th, last day of the month. We'll see how things close out here. Overall, you can see yesterday the markets gap lower, sold down in the morning. They dipped into an oversold territory and then had a bounce back up, more or less getting back up to the gap window that it created. It created a little gap, dropped off, came back to be relatively flat on the session. Now, overall, we are anticipating a little more downward bias in the market. If we look up here, you can see this key resistance area on the SP 500. We tagged it. We've been pulling back, and we're going to see if the market is going to crack and break to the downside. Now, we just had some half decent GDP numbers, but the way it typically works is they buy on rumor, you sell on news, meaning we finally got some good news out, and we'll see if that sells off. It might create a pop in the market. Maybe we pierce through here for a day or two. We've been talking about that since over here, more or less, that we might get some type of pop and break and then reverse back down. So could continue to see the market hold up for a little bit here, but typically we see selling on good news when this kind of thing unfolds, especially up near resistance. If we take a look over at, let's pull up the chart of bonds real quick. Bonds are down a little bit the last couple sessions here, simply money moving into stocks or holding up in stocks. And bonds continue to just kind of chop around this sideways channel. Overall, in a much larger channel from the high to the low down here, we do expect it to continue to just kind of flounder and hold its ground. Taking a look over at the dollar, yesterday the dollar gap lower ended up rallying. It does feel like we are in something similar like this over here where we could see it continue to push up. Obviously, if we see the dollar move higher, it is going to put some downward pressure on commodities. You can see the last two sessions, yesterday morning, the market dipped in, the dollar dipped into an oversold territory where we got a little bit of a bounce out of there. We'll see if we get more of a bounce today. And of course, if it does get some traction on the daily chart and we start to move up to hit some new multi-week highs here, then we are going to definitely see the precious metals market struggle quite a bit. If we take a look over at gold and silver, yesterday, down day, today trading a little bit higher. Overall, continues to chop around. We had this kind of steady rise here, consolidation. Then we started to get into some bigger pops, where some big intraday swings, sell-offs, big gaps to the upside. Kind of consolidated, some big pops. We're getting into this volatility that I talked about really back over here near on this day when it put in a high. One of these 2 days we talked about things might pop and chop around in a big way. In the grand scheme of things, we are getting into something similar to over here where we're going to see big volatility, big range. The question is, does gold hold up in this range and chop around, or are we going to see it pull back to the 1300, potentially 2600 area to really cleanse itself? We don't know yet. All we know is this run that we got long here back in September. We caught this initial move up. This main run is done. Now we just need to let it build a base to either break out or start to break down. Taking a look over at, let's pull up natural gas real quick, up 1% this morning. More or less, it's holding its ground. It's holding the 5-day. We did get long on this day. It dove down to the 255, and we ended up pulling money off 30 and 25% a couple days ago. Overall, that's what we were looking for, was a quick pop. Don't want to hold natural gas too long because you never know what's going to happen. What goes up can come straight back down very quickly. ETFs make it even harder because they lose value every day if the price doesn't move substantially in its favor. So we caught that beautiful move. Overall, we'll see how it unfolds, see if we do get another potential setup, maybe to the long side, maybe we come back down to this 255 and we rinse and repeat the same type of move. Overall, if we look at this, our short-term intraday chart, natural gas is still technically in a downtrend, which is why the bars are red. We pulled money off over here. We had a short sell signal. This is on the momentum trading signals, telling us that the market is getting overdone, and this is why we took some of our position off here at 30% or so. Actually, we took it off right up near this high. The next day it gapped higher, sold around, and now it's forming somewhat of a bear flag. If we look at the price action gaps, you can just continue the previous move down to a gap, meaning price is down, and now it's forming this bear flag coming up into more or less this resistance zone where we had a little consolidation here, a pop, also a pivot low where the market gapped, and we could continue to see this move down. We do have a downward bias for natural gas, the cycle here still. So overall, those are the kind of some of the reasons behind the scenes of why we got in and where we got out for natural gas. Looking over at crude oil, I just haven't been feeling it in crude oil. I mean, it looks like it's starting to set up with some type of setup here. It's ping-ponging around between these two blue lines, which is now support and resistance. You could argue here that if it breaks out from here, we could start to see it run up to the 60 level, 62 level. Overall, again, if the dollar starts to rally, we might see this fizzle back down and come back down to this 52 range, which acted as a previous pivot high and consolidation and a couple pivot lows. So overall, I'm not too excited about natural gas. It did get oversold a couple days ago, 3 sessions ago. It's had a pop since then on the kind of intraday momentum style signals. Looks like the downward bias for crude oil today is downward with our purple projected cycle analysis. Taking a quick look at Bitcoin, up 2.5% today. Let me just zoom out on this chart so we can see the big picture. The big collapse here from the $6 mark or $6,000 mark. Again, we've got this, whoops, wrong tool. We've got this sloping kind of trend line across these pivot highs over here. And more or less the market is trying to carve out a bottom. This is what I like to see. I like to see a waterfall sell-off and a push to a new low and another push to a new low, and then for price to more or less start to channel sideways in a controlled manner. This is panic. This is people just giving up on the commodity, and that's when it starts to show life. These are kind of, you could argue, some of these spikes here are kind of what you can call as get ready spikes. We're starting to see some money start to move back in. Momentum is shifting to the upside, but it hasn't broken this falling trend line yet. If it does pop and break, I think we could see a pretty good run in Bitcoin and digital currencies across the board. Bitcoin is kind of like the SP 500. It's the broad market. It's the tide. When Bitcoin is rallying, we usually see other currencies rally with it as well. So overall, starting to look bullish. But it hasn't technically broken out just yet. If we actually look at the our 30-minute trend line, you can see it has technically moved from, I'll zoom out a little bit here, from more or less red and orange bars, so down to neutral, to now it has turned green and it's oversold. Yesterday was oversold as well. Still have potentially today, maybe it flushes out, puts in a little more of a bottom, but overall it is shifting on the shorter term time frames to a positive upward trend. Taking a quick look at our positions, NIO up again yesterday. I feel as though it's on the verge of a potential another pop up to this 1230 area. I do feel as though the equities market is primed and ready to roll over. So if we do get another push and pop, we might just close it out. Maybe we'll close it out sooner than that target. Overall, we're up pretty nice on it. It's had a nice pop and run. And this is the type of price action where we've seen in the past, where what goes straight up usually comes straight back down, just like over here. So do need to be very aware of that. Another push to new highs or some bearish sentiment or vibe from the market will probably just close it out, lock in the money, and let it do its thing going forward. Looking at Tech S, this is our technology inverse ETF. We're looking for a sharp correction in the market, just a couple day pullback, potentially to this 20-day or maybe a little bit beyond. Overall, we're still waiting for that to unfold, and if we do, it'll just be a quick swing trade in and out, a counter trend trade, and then when we could be looking to get long back into some new stocks when the market's kind of cleansed itself. Again, if we look at the NASDAQ, which bodes well for more or less the tech sector, or actually we could look at the XLK, you can see this channel that price is running up. A very, very nice channel. It is getting very tight and narrow. We could have some type of blow off move. We see this explode to the upside. This type of price action usually leads to an explosive move. Lots of times we see a pop to the upside followed by very sharp reversal in the market that takes a lot of momentum out of the market. So I feel as though we're close to one of these big setups, either a pop and a breakdown or a breakdown. We could get a pop and a rally and extension. We'll have to see, but everything is kind of setting up here for a breakdown, a sharp one in the market going forward here. That's it for now. Take care and talk to you in a little bit. Bye bye.